Welcome back. Down 0.5% now on the benchmark indices. Let's find out what the situation is in the commodity markets and what the rates look like. Manisha.
Thank you for that, Rima. It's profit-taking across commodities as well. And I want to start with the gold prices because we saw all-time highs here when we saw those tariffs come in, and $3,500 an ounce of an all-time high is what the gold prices hit. Well, since it has been US and China trade agreement, even if it's temporary and for 90 days, we have seen that constant profit-taking continue in case of gold prices. So 3150 and below that is how the gold prices are trading now. It is a 5-week close coming in for the gold prices. Let me still remind you that for the year, we are up by nearly 24%. And for the last 12 months, it still is 40% higher for the gold prices. But from its all-time highs, the gold prices now have declined by nearly 10%. So huge profit taking coming in, and this is in less than a month that we've seen the gold prices see that kind of a decline there. Well, one is, of course, the focus has shifted away from the safe havens. It's risk on, and we've seen money flow into various other asset classes. And majorly, it is profit taking because the street believes that various cues, the reason that the gold prices went higher, seem to be easing off now. One, of course, is the US and China trade tensions, though it seems to be diminishing right now. And then the US also has been reiterating that the trade agreements are processing well from various countries like India, Japan and South Korea as well. The third point really is about Trump lifting sanctions on Syria. This was announced in Riyadh when he was visiting Middle East, and that also has eased pressures a bit. It also is about India-Pakistan tensions not escalating, stabilizing even. And then it also has to do with the softer than expected US inflation numbers that also have led to this decline in gold prices. But it's not just gold. If you look at silver prices, they also fell 2% in the overnight markets. We are trading at a 1-month lows for silver as well. So when you look at on a week-on-week basis, we have seen the gold prices decline by 5% and silver is down 2% in the same time as well. And it's not just about the precious metals. The industrial metals also have seen a sharp decline. Whether it is about copper, aluminum, zinc, we have seen prices decline. And if you look at the crude oil prices, there has been a very sharp cut coming in for this as well. It has been 2% of a cut on 2 days now come for the crude oil prices. And with that, now we are off those 2-month highs that we were trading in. Well, the major factor here also is that Iran has said that they are ready for a nuclear conversation. Remember, there has been 4 rounds of talks there. And Iran also says that once the sanctions are taken off, they can talk about nuclear deal here. So there seems to be some progress in conversations coming in there as well. Apart from that, when you look at the U.S. crude inventories, well, they also have seen a surge by 3.5 million barrels. Street was anticipating a 2 million barrel of an increase, so that has been weighing. And then you have the OPEC trimming supply growth from non-OPEC countries, suggesting that if the crude oil prices stay where they are, then for U.S. and for the non-OPEC countries, it wouldn't be very profitable to continue to produce crude at these current levels. And then U.S. OPEC and oil supplies also have been increasing, even as OPEC is looking to increase production for the month of May and June. We have seen some internal disparity not continuing to work there, and that seems to be weighing onto the markets there. So whether it has been about precious metals, industrial metals, energy prices, all of that has started Asia on a weaker note today. What the markets will want to watch out from here is the US PPI numbers, and that would give you further direction from here.
Thank you very much for that.